Has the Union Budget 2025 been any different? What did you get with the budget that you have been waiting for? Is income tax exemption level up to 12 lakhs going to change the household realities of Indian middle class? Will income tax exemption limit actually lead to consumption? What would you buy with the income tax exemption? Property, car, or gold? Does not hyperinflation, especially food inflation, balances the income tax exemption benefits? Should not tax exemption limit be linked to cost inflation index and not dependent upon to the wishes of the finance minister? Has not the domestic saving rate of India been continuously falling? Is not the rising household debt a predominant reality of middle class? Is there any substantial to fuel home buying? Has the wish list of the home buyers been fulfilled? What is there in the budget to fuel job growth? Has the wish list of real estate sector been fulfilled with this budget? If Union Budget 2025 was aiming at headline management and garnering likes, it deserves 10 by 10. The Union Budget ahead of a few significant assembly elections has quite obviously aimed at headline management and garnering Facebook likes. And to a large extent, the finance minister and Modi government has succeeded in this. Since the most vocal middle class of India has finally got something to cheer about. I am Ravi Sinha and I would raise the larger issue whether the personal income tax exemption level up to an income of 12 lakh rupees going to change the household realities of the shrinking middle class of India. More importantly, will it lead to consumption and asset creation, and that too of a high value asset like real estate? Now you may say I am raising too many questions, but the fact of the matter is that this budget has raised more questions than what anybody could probably answer. The budget claims that the government's effort is five-pronged to accelerate growth, inclusive development, private sector investments, uplift household sentiments, and enhance the spending power of India's rising middle class. The last two mission statements affects the common man the most. Let's do a cost and benefit analysis of how income tax exemption limit would affect the consumption sentiment and also lead to asset creation. We have to first look at the ground realities and financial compulsions of the urban Indian middle class. There are 570 million Indians who make up India's middle class, roughly 38% of population, with household earning between 6 lakhs to 36 lakhs. Their percentage of population has shrunk in the last few years, especially post-COVID. But that is a subject of discussion some other day. This middle class is reeling under a triple whammy of high inflation, particularly of food, high taxation, and stagnating incomes. Private consumption, which accounts for nearly 60% of India's GDP, has been a significant growth driver. However, the urban middle class, the backbone of this consumption, faces stagnating real wages, mounting household debt, and surging cost of living. Reports indicate that real wage growth in India has been negligible at just 0.1% over the last 5 years if we adjust it with inflation. This stagnation has severely eroded purchasing power, compelling households to cut back on discretionary spending. Food inflation remains alarmingly high at 10.87%, disproportionately impacting middle-income households. Food carries 46% weightage in consumption basket. This has forced consumers to prioritize essentials over discretionary goods with ripple effects across the economy, according to RBI data. Net household savings as a percentage of GDP are at the lowest level in nearly 50 years. India's gross domestic savings rate fell from 34.6% of GDP in 2011-12 to 18.4% in 2023-24. Household savings that constitute total 60% savings in the economy, but as per RBI data in June 2024, household debt stood at 42.9% of GDP at current market prices. Loan against gold is also all-time high in India, thus reflecting a stressed out middle class that has borrowed from multiple lenders. Mounting unsecured loans have pushed net savings into the red, leaving families with less disposable income. This is particularly noticeable in urban areas, where the middle class forms a significant consumer base. There is slowdown in even entry-level consumption items today. Companies like Nestle and Hindustan Unilever have reported a decline in demand from the middle class, indicating a reduction in consumer spending. Thus, it is evident that the middle class Indians are borrowing more for consumption and definitely not asset creation or productive activities. This borrowing is into negative zone and not positive zone of asset creation and productive activities. A saving of few thousands with this budget income tax exemption limit won't change the ground realities of India. It would neither fuel consumption nor lead to asset creation. The priority of an average Indian household at this point of time is to reduce the debt burden and add savings for emergencies. But the stakeholders of Indian real estate are, for some strange reasons, projecting as if the person has more disposable income for asset creation now, and as if everybody is rushing to buy a house. Thank you all for subscribing our channel and posting your comments. I appreciate. Trust me, I take time to read all the comments, and I take your comments, feedback and queries with due professional seriousness. I would continue to make video on the topics and questions raised in the comments section, as I aspire to make this platform dialogue driven. May I request you all to subscribe this channel and keep posting your comments. Our mail ID is given in the description, and you are also free to ask questions through your short and crisp video. I will try my best to take your video queries and reply it in the subsequent video. Let's make this channel unique and dialogue driven. For instance, thank you. If we do a cost breakup, say someone earning 12 lakh yearly will now pay 0% income tax, and we are taking 12 lakhs as the median earning of the middle class Indians in this calculation. This between 6 to 36 lakhs, we have taken a median income of 12 lakh. Even if we don't factor in the standard deductions of PF or HRA and other allowances that differs from company to company, and take this 12 lakh as his take-home salary, it simply means that one is earning 1 lakh per month as a take-home salary, right? Now, from the thumb rule of house affordability, that is 5 years of one's gross income, with second simultaneous condition of EMI not being 40% of take-home salary. Now, this IT exemption does not make any sense to buy a house. Someone earning 12 lakhs, so the house worth of the house should be 60 lakhs. Where is that kind of house available in any top tier cities? Forget the metro city. Similarly, to make a payment of 40,000 as EMI, the cost of the house should not be more than say 50 lakhs. Is this available? Citing research reports of real estate consultants, the economic survey ahead of the union budget said that housing demand in India is expected to touch 93 million units by 2036. But This budget has more failures than successes for the average middle class Indian aspiring to buy a house. With India's affordable housing shortage projected to reach 31.2 million by 2030, there has been absolutely nothing for affordable housing in this budget. Forget affordable housing. Even the basic need of EWS, economic weaker section housing, was not even mentioned in this budget. There has been no incentive to buy a house. No measures has been taken to lower the home loan interest burden of the home buyers. Section 24 tax rebate has not been hiked beyond 2 lakh. Expectation was to see the rebate of 5 lakhs. Housing loan principal repayment is still at 1.5 lakh under Section 80C. There has been a need to hike it to 5 lakh. Under Section 54 of the Income Tax Act, long-term capital gains from selling an existing house can be reinvested in a new property. However, the exemption applies only if the property is completed within 3 years of the sale. Given increasing project sizes and frequent delays, there was a need to extend it to 5 years. Additionally, the rule requiring a home buyer to purchase a new property within 1 year before or 2 years after selling the old one is seen as restrictive. The union budget did not extend the pre-purchase period to 2 years and give home buyers more flexibility in finding the right property. No measures have been announced for rollout of rental housing and make it lucrative for the investors. There has been no encouragement for NRIs to buy a house in India, something that could bring dollar revenue to the economy, that could also balance our dollar rupee imbalance. Yes, the union budget has allowed the benefits of two self-occupied properties, expecting it to bring more investment in real estate. The union budget also exempted TDS limit on rental properties from 2.4 lakh to 6 lakh. But the larger question is whether it affects the large universe of middle class of India. The fact is that only the real wealthy Indians can today afford to have two properties, and it is definitely not the reality of vast majority of Indians. The focus of the finance minister has definitely been on super prime borrowers and not subprime borrowers. By the way, subprime borrowers are the ones who are stressed out because their credit limit is not as high as the credit limit of super prime borrowers. So the focus of the finance minister is on super prime borrowers, and it would only encourage buyers who can afford to park money into real estate. As far as the common man is concerned, who was looking for a basic need of roof over the head, well, I would say that you have never voted for development. So you better bear with it. I have a few pertinent questions with the industry stakeholders as well. I have a few questions for the leading voices of the Indian real estate. But I would raise those questions in my next video. I am afraid raising too many questions in one video might get me a GST notice. And this GST with a sin item slab of 21% would be actually saying go slow tax. Thanks for watching.